from Singapore. He's CEO and fund manager at Astral Asset Management. Kian Soon, are the markets too quick to jump on any good news at this point? Because we did see, yes, jobs growth better than expected for the month of June in terms of the US data, but also rising initial and continuing jobless claims. So is there some distortion in terms of the data we're getting? Why are the markets so exuberant?
I think we have seen the best of the global equity markets in the second quarter of 2020 after the biggest plunge we experienced in the first quarter. I think most global equity markets have plunged at least 20% in the first quarter. And if you could see the second quarter, most of them have recovered very strongly on the expectations that the data is not that bad, on the expectations that the virus situation is under control. And most countries have, in fact, have come out of the circuit breaker or lockdowns and are beginning to prepare to open up for business. So all the good news have pushed the second quarter global equity markets into a strong rally. And if you could see at the data year to date, right, Shanghai, Japan, Korea, they are all down less than 5%. And if you look at the US market, the Nasdaq on its own have actually rose more than 10%. So this is basically a very good news for the global equity markets as they are experiencing high expectations of a recovery, and also that the virus situation is not as bad as the initial shock and all that the markets have experienced.
Well, it's not just that as well, right? I mean, because of this very accommodative stance that central banks around the world have adopted, it's spurring all this cash flow into the stocks. So underlying economic growth might not actually match up to that.
That's correct. If you look at the economic indicators that's going to be announced on the third quarter for the year, I mean, looking at IMF and World Bank, they have already forecast at least a -5% contraction in global economy, and that is subject to there's no wave 2 for the virus. This is very serious because if you ask me, the unemployment figures and retrenchments are just starting. As companies are opening up, they can begin the communications. If you look at even second quarter numbers that's going to be announced for most companies, the financial situation of most companies is not going to be pretty, and the outlook is going to be rather bleak. However, the strong fiscal policy of about 8 trillion globally has helped, in terms of helping the markets in terms of liquidity. And honestly, if you ask me, for a lot of investors, the question now is, if it's not equities, what else could I invest in?
You're talking about that global stimulus that's being pumped in, some 8 trillion. That stimulus package, those stimulus packages are going to come to a stop at some point. What happens when that happens?
So that's going to be unfold in the second half of this year as most stimulus package run out of steam, and it all depends on the situation, whether all the countries manage to get a hold of the COVID situation. The economy could not be locked down for forever, as most countries are trying to open up their economy as unemployment and poverty soared. So there is a delicate balance, and I must say this is a very challenging situation for most countries. Even coming up with more money or printing more money might not actually help the situation in the longer run, because giving easy money away is not always a solution to such problems.
Right, and Kian Soon, adding to those market woes, the geopolitical risk we've seen in the past week, China, enacting that national security law for Hong Kong. To what extent will that impact Hong Kong's status as a financial hub? Because there's concern about the ease of doing business there.
So I think there are two groups of stakeholders. I think for international investors, most of the investors would have preferred Hong Kong to be a more secure place, which is stable for the long run, and which makes their investments everlasting and as stable as before. However, the locals will have a different perspectives on how the security law will impact them, and this could cause a bit of tension going forward as the laws are announced and cast into stone in the local Hong Kong legislation. Similarly, in terms of geopolitical tensions, the US-China tensions is going to unfold as the US march into an election in November, and this geopolitical tensions globally, right, with trade tensions with the Europe, US, will ultimately result in some kind of market volatility in the second half of this year.
Thank you very much for that, Kian Soon. Lee Kian Soon, the Chief Executive Officer and Fund Manager at Astral Asset Management.